welcome everyone to Strategic Growth Council, a podcast about strategic growth and mergers and acquisitions for the middle market. Every episode, I interview an expert in the world of strategy or growth or M&A, and today I'm joined by Dave Hoag and Chris Longiaru of Acclaro Partners. Welcome, gentlemen.
Thanks for having us, Kit. Appreciate the opportunity.
Absolutely. So it's my pleasure to introduce Dave first. Dave is a partner at Acclaro Growth Partners. Dave, 30 to 60 seconds of background on yourself, please.
Yeah, sure. Well, again, thanks for having me. I think this is exciting. Seeing you here in this format is pretty interesting to me, given that we started way back in the day when Acclaro first started. I was in the other office from you, and you decided you were going to start a company called Acclaro, and I decided I was going to do management consulting work and contracting work on my own. This after having worked at the same market research company for a while. So we kind of grew up together in this business, and that was over 20 years ago, 25 years ago, or whatever it was. And I've pretty much stayed in that lane with a few departures for a couple of entrepreneurial endeavors, a sports-related one, a poker-related one. But at the end of the day, I come back to my longtime career of working as a consultant and as a leader of market research engagements that are M&A focused. So that's where I am today. Now as a partner with Acclaro, couldn't be happier.
Great, Dave. I thought maybe you were going to start talking about Cherry Hill, New Jersey. I'm glad you did not. We'll save that for another time.
Sure. That's another story that we don't have to relay now. Maybe podcast
yet another story. Right. So Strategic Growth Council is an outcrop of Acclaro Growth Partners, where Chris Longiaru is Chief Operating Officer. Chris, why don't you give us about a minute's worth of background on yourself?
So mine's not, I don't go back as far as Dave does, and it's certainly not as exciting, and I'm certainly more cookie cutter. So, I started out in the world of investment banking like everybody does. I moved to, money management, sell-side equity research, everything financial you could possibly think of. Kit plucked me from a private equity firm, and here we are. So, we're, just doing diligence day to day, and that's sort of what we're going to get into. So that was my quick background.
That's wonderful, Chris. Thanks.
Not as fun
Diligence is the word of the day. Well said. So our audience here is comprised of growers and acquirers and business owners that are contemplating a sale. But we're going to talk about due diligence on the buy side. So specifically, market or commercial due diligence, which I understand is one of Acclaro Partners' three big service areas. So what the heck is market/commercial due diligence? I'll tee that up to anybody.
Well, I'll start with a short answer, and then Dave can give a long answer. How's that sound? The short answer is this. If you were going to buy a business, you would want to know some things about it. And the smaller or nichier your business is, the harder it is to find answers to the questions that you're going to have. And what we do is we find the answer to those questions through a bunch of different means. And now, Dave, you can be more eloquent than I am.
That's great, because that is in fact the bottom line of what we do. And then the more specific things of what comprises market and commercial due diligence. What are those questions that you have that are going to be answered or need to be answered? You can really characterize it as a market assessment, a competitive landscape and positioning assessment, an understanding of the customer's needs, a voice of the customer, if you will, customer feedback, and an assessment of growth opportunities, for the company that you're looking at. The market assessment ranges widely. It's oftentimes issue driven, but there's usually a market sizing and growth rate analysis component to it. Market segmentation, if it's detailed, or not, if it's a very specific niche. Trends and dynamics affecting the business and keys to success. I won't get into all the details and components, but you're going to want to learn about your competitors and their positioning, what their strategies are, where they're looking to grow, what your customers' decision drivers are, what their value drivers are, what their unmet needs are, how sticky and loyalty they are. And then finally, but most importantly, where the growth opportunities are for the business moving forward, post-close, post-acquisition, right? The adjacent products and services, or the adjacent markets and customers, or new markets altogether, or new business with existing customers. Those are the components, the key components of the work that we do in what would be classically called commercial due diligence.
Okay, that's great. So I'm going to try to summarize. Correct me if I'm wrong, but it sounds like what you're saying is that you're answering three big questions and then a whole bunch of sub questions. And those three big questions might be, do we even want to invest in this market in the first place? How well positioned is the company in this market relative to whatever competitors, market opportunities, customer needs? And then thirdly, what are the opportunities for growth going forward post-close for the buyer? Would you agree with that, or did I mischaracterize?
So, basically think about it. I mean, if you're going to buy a business, you're not going to buy it thinking that you can't do something more with it, right? So that goes to the point is that, are there trends that we could take advantage of? Are there angles that we can use or can take in order to take a company further than it is when we buy it, right? To generate ROI and revenue and earnings growth and all those wonderful things. So in order to do that, you have to understand what your competitive landscape is. Like Dave said, who are you competing against? How are they competing? How much of the market is there? How big is it? Are we a major portion of it, or are we a small portion of it, which is going to affect the way that you compete in the market, right? Are our customers price sensitive? Are they not? What's the supply and the demand for what we do? So all of those questions, can get asked in any due diligence project, and they help you to understand the questions that Kit laid out. Should we buy this company? If we're lucky enough to get our hands on it, what are we going to do with it, and how are we going to be successful doing those things?
That's great. Now, we've all used the word, I think all three of us have used the word customer in describing the answer to that question. Is customer due diligence part and parcel of market or commercial due diligence, or is it sort of separate? I know some people sort of refer to this as customer diligence or customer checks.
Well, I personally think you can't. Oh, I'm sorry, Chris. No, I was just going to say, I personally think you can't do you can't do a market due diligence without customer assessment. Now, we've done studies where we're just looking at the metrics of a market, right? How big is it and what's its growth rate and so forth. But part of sizing a market is understanding the demand and the trend in demand from the customers. Part of understanding the growth rate and trajectory is understanding where the customers are looking for the growth and what products and services are going to be key to them in the future. So, it's not just a voice of the customer and, hey, how is our company doing in the customer's eyes? The customer has a significant impact on all the drivers, all the issues that you're going to be looking at in a market due diligence.
Great. Now, Chris, I've got a question for you. 20 years ago, when Dave and I were starting out doing this type of work, it was not uncommon for a private equity group, a potential client, to say, that's what our junior associates do. Why would we hire you guys? And my suspicion is that maybe things have evolved a bit since then, or why do clients hire you?
There's a ton of reasons for that. One, if you do anything a lot, you're going to be more efficient at it, right? I mean, we have a core capability that makes us very good at this, and we're going to be quicker. Anyone who's been around this as long as Kit and Dave have seen basically the timeline from start to finish for an acquisition shrink. Right, they've seen the different work streams get more and more complex, and there's more of them. So first of all, if you are a buyer, right, you've got enough on your plate. If you can outsource some of that stuff, that's much better for you. Number two, if I was going to buy a company and I called that company or called a competitor to talk to them about it, one, they may not be very honest with me. Two, they might get wind that there's a transaction, which could affect the transaction, which could, or affect the answers that they give. So the combination of those things makes it a more practical thing to outsource. And I think that's why we exist.
So, Dave, it sounds like Chris is saying that anonymity is paramount, obviously. It sounds like it has to be during a transaction. Do you do this work blind, meaning you don't reveal to customers that you're doing a study on behalf of their primary supplier? What's the process for doing this work?
I'll answer that a couple of ways because I think to go back to one of your questions too, where I think one of your hypothesis was, hey, we have junior associates that can do that kind of work for us, and to add on to what Chris was saying, which leads into our process and how we do it, is the idea that we have the ability to know what kinds of questions to ask and how to ask them to get at the depth and detail that actually is more it provides the insights and the robustness to the analysis that you're going to need. That you don't want the canned answers, you don't want just the question answer check the box multiple choice kind of answers, right? And having done this for as many years as we have in as many markets and in as many industries as we have, there's a process by which we interview, we conduct our research, and that's through prime source interviews that do not disclose the nature of the interviews, meaning we don't say specifically who we're working for, and we don't say specifically that there's a deal, but rather we engage somebody in a conversation about what they know and what their expertise is and what they like and what they don't like and what keeps them up at night. And the ability to have our people who are senior people have that knowledge of process behind them, that research process to get at the details that are needed and wanted, by our clients in a way that is non-threatening and confidential while being above board and ethical is truly our expertise, right? We combine that process with the fairly typical secondary source research exercises where we scour the world for the data and information that currently exists. But most of what we do is derived through those sources where that information doesn't currently exist. We extract it from the experts and the participants in the market.
Okay, so let's summarize because I'm kind of drawing several conclusions here. One is that this is equal parts science and art. The science part is the analysis and the rigor that goes behind the interpretations of whatever data you end up with, and the art is the art of conversations, getting people on the telephone and talking to them in an interesting and conversational sort of way. But Chris, I'll turn to you. In addition to this conversational approach to primary research, Dave mentioned secondary research. Are there other research methods to chat about here?
Well, there are, and I mean, there's a difference between the output and the answer, right? So, what our clients really want from us is the answer. And the answer is actually a combination of a lot of different things. We have a lot of different tools that we use. So, a big one is primary research, as Dave said, right? I mean, you go into the market, you talk to people in the market, and you're going to find an answer in the market. But there are often times when, the participants in the market are so close, there's the phrase, only, missing the trees and missing the forest and only seeing the trees. Let's spit it out. That happens a lot. So what we do is we take data, whether it's secondary data, we use surveys, Monte Carlo simulation, mixed mode surveys, primary research, and through all the means that we have, we combine all that information to get to what is the answer. Right, and usually the question is, should we buy this company and can we grow it? That's the overarching question, and it seems simple, but it takes a lot of time, a lot of different angles and a different means of information to get there, and that's basically what we do.
All right, so if I can extrapolate from that, it sounds like the kinds of discoveries that you're making are really designed to help clients address whether they want to buy the company or not and how to grow the business after they have acquired it. Are there discoveries that you've made during this process that reveal something to your clients that they wouldn't have otherwise picked up on?
If we're doing our job right, yes. Listen, it's great when a client comes to us, and obviously if they come to us, they're excited about an opportunity. Right? If they weren't, they wouldn't have picked up the phone in the first place. It's great when they're excited about an opportunity and they think X, Y, and Z about this opportunity, and that's why they're excited. And through the diligence process, we confirm X, Y, and Z. That is rare. Often what we find out is, well, you thought it was X, but it's maybe it's a little less than X, or, this is something you didn't even consider, but this is out there in the market and maybe you can take advantage of it. Or we've talked to all of these customers in the market and these customers are saying, man, if I could only have this thing, and nobody provides it. So, that's the long answer to Kit's question, which is, I don't think we ever end up where we started, right? Meaning, just confirm this for me and I can buy this company. And that's valuable. And that's once again, the reason we exist.
Well, you talked about a couple of upsides, a product or a customer need that exists that maybe the target company can solve that they weren't aware of. They weren't aware of that need, or maybe the growth rate is even better than expected. What are some red flags you might uncover, or are there any real significant challenges or disconcerting discoveries? What's the worst thing that could happen during diligence, I guess is a better way to put it.
Yeah, I would say that there's a few things that would fall under, what a client might think are the worst things that could happen. But as far as we're concerned, and ultimately what our clients are, from our clients' point of view, the truth hurts is a good way to put it, because they actually need and want to know the truth, even though it may hurt. So you might learn something that contradicts a preconceived notion. And while that sounds like it's, we had a false positive, or, we have a red flag in the deal, really what you're doing is learning something that you didn't otherwise think was going to be the case, moving forward. And you're now prepared to deal with that one way or the other. And it's up to you as to how you deal with it, right? So an example of that might be, hey, there might be a customer that you thought you had locked in that actually is, answers the question that they're looking around, or that they're interested in seeking other opportunities, or that there's a technology that they've been evaluating that your company doesn't offer, or they don't think they don't think that you offer, but maybe you do. So there's potentially the lack of a communication there. All of those are some potential red flags that come up, but at the same time, they're the things you actually do want to know. You don't want to go into one of these types of decisions blindly. You don't want to, what we tend to do in this case is remove the uncertainty from a decision or an investment, right? We don't just validate assumptions and hypotheses, which we do. We confirm them or refute them, and it works both ways. Sometimes refuting hypotheses is good news. Sometimes it's bad. But, we remove that uncertainty, and we prepare, prepare our clients for what they're going to face in the future. And then, at the end of the day, if that results in a dead deal, well, so be it. You're better off because of it. Most of the time it doesn't, because they, our clients, like Chris said, they're excited about an opportunity. They've done their pre-diligence, there's an obvious reason to make the acquisition, but certainly you want to know everything you're about to go into.
So reading between the lines, eyes wide open, is a good thing, because now you know that there's a risk that you didn't otherwise know about. So that arms you to go back to the negotiating table and say, here's what we discovered. This is bad news, but now that we know that, we can mitigate this risk and deal with it and move forward in a healthier way. But oh, by the way, this involves more risk on the buyer's part, on our part. So we're going to have to ask for a discount. Does that sort of thing happen? Do you cause sellers maybe to walk away because of that sort of renegotiation?
I don't know if walk away is the answer, but I mean, I think everybody who's ever bought a business would tell, a private business, it's not like the publicly traded markets. Once you buy it, you own it, right? So you can't really get out and cut bait. You own it. And if you don't want to own it anymore, you have to convince somebody else to buy it. And they're going to do the same type of diligence, and they're going to hire somebody like us to do that diligence, right? So the idea there is that, if you're going to spend a lot of money to buy a business that the risk mitigation cost is actually not that much relatively. Number two, if you do discover something, going back to the seller and having a conversation about that is important, right? And the seller might say, well, hey, we know that's coming, and here are some things we're doing to prepare for that, right? Or they might say, well, I had no idea. And that might put them in a position where, one, they would want to renegotiate because they want help to solve this problem. Or two, sometimes it might result in an impasse and a dead deal, and that does happen. So, I mean, there's a number of different outcomes that could happen.
Okay, great. Thanks, guys. Now, I heard one of you say that this is not just a check the box diligence exercise and that there's real value in terms of actionable intelligence, taking next steps. But does that hold true for management as well, or is this really becomes a shelf document that the buyers maintain, or does it carry forward to management? Is there value for management?
It absolutely carries forward to management, and I really think that that's the bottom line for us, right? Because contrary to what we just talked about in your previous question about potential red flags or risk or what have you, most of these deals are going through. I mean, there's a compelling reason to buy this company, and the management team, they're going through uncertainty at this time as well, right? It's a scary time for them. They're selling their baby. It's something that where there's been a lot of resources and effort and sweat and blood and tears and everything that have been put into the business. So it's not just a shelf document for us. Most of our clients and the companies themselves, the management teams, use our work to guide future growth, or at least as a checkpoint to make sure that they're not being complacent or that they're not missing an opportunity. And further, we help to point out next steps, right? Be it internal or external, meaning next steps for the team, for the management team, for the company itself. What should we be doing? Not just, where's the next growth opportunity, but what should we be doing to ensure that we're successful over the next 3 to 5 years, or long term, or whatever the trajectory is, right? And those that that's all. What we provide is based in fact and real-time situations, and not just conjecture, right? So maybe up to the point of having been acquired, a management team has gone on instinct, or relied on a few key conversations they have with the people that they feel the most comfortable with, whether it be a key customer or a mentor, an industry expert. And what we have and provide is fact-based, real-time situational analysis that gives them a guide or a map to their next steps, to their growth opportunities, to help them grow.
Is there anything, as we talk about due diligence, as we talk about market diligence and trying to decide whether we want to invest in this market, or if the company is well enough positioned in the market, or if there are enough opportunities to grow the business post-close, are there any lessons learned for our audience of potential acquirers, things that they may not have thought of, tricks up your sleeve, or tactics that they should pay attention to, strategies, research that they should look into?
I think industry research is really important, right? If you are the giant in a small industry, right? Sometimes it's easy to compete, and the opposite is also true. And the dynamics of how you compete, whether you're the best or the worst, and the growth rate of that market, the size of that market, those dynamics have more bearing on whether or not an investment will be successful than anything else. So I think looking at companies in the context of their environment and their opportunity usually leads to better outcomes, and I think that our clients would agree that that's true.
Dave, anything to add to that?
Yeah, the thing that I would say there is, it would be smart, or it is smart, to do forward-looking research and not just relying. So when we talk about customers and when we talk about competitors, and up into a point, right? Meaning a business it was founded, it grew, then it got acquired, and you're talking about customers that they've had to that point. You're talking about competitors that they see right then and there. And we really need to be looking forward. Let's talk to prospective customers in new markets and ask the different questions, not just what products do you want or need? And would you like to get this product from a company that also does this? We do ask those questions. Those are important. But what keeps you up at night? What drives your industry, or what motivates your decision making? What does your process for XYZ, whatever the subject matter is, what does your process look like, so that we can then map on something that we either have, can modify, can develop, to meet those needs. Let's look at the future needs of prospective customers. Let's try to understand who our future competitors are going to be and what their strategies are and where they're looking to grow. I think that's a key point, and not just to be stuck on, hey, let's ask our customers how we're doing, and let's ask our competitors what they're doing. It's more than that.
Okay, that sort of leads to another question, and that is, I'm interested in learning the full suite of services. I understand there's three, but from the diligence point, there's an opportunity for a market refresh study halfway through the hold period? Is that something you guys have given much thought to, and how does that tie into other services that you offer?
We've thought a lot about that. So, I mean, I kind of think of it this way. There's a life cycle of a business. It actually goes around and around, and it's basically, a business is getting sold. So we're going to do the diligence on that business, right, for the buyer. Then the buyer owns it, and the buyer's going to basically, the reason that they bought it, once again, I said this earlier, is that they think they can do something more with it than has been done historically. And so we just talked about diligence, which was, if you were going to buy a company, what would you do and who would you talk to? And hopefully you'd call us. But if you own it, right, how would you verify or do work on assessing how you would be able to deploy certain initiatives to grow the business? Well, we do a lot of that, right? And so Kit talked about a refresh. You can have it ongoing. You can have it be very specific to a specific initiative, or you can have it be broader. And so the idea is doing some type of what we call strategy work during an ownership period will allow you, right, to deploy your resources in a more focused way in order to attain the kind of growth and success that you were looking to when you bought the business. And then lastly, as you get to the end of that cycle and you say, well, I've done everything I wanted to do and I've been successful and I've grown the business, you're going to want to sell it. And something that you can do to facilitate that process, which is something that we do, is you can have a sell side study done. And a sell side study educates a potential buyer or group of buyers on this niche market that you didn't know anything about until you did the due diligence during the process when you bought it. So the idea there is to be able to get people up to speed fast enough so that they can say quickly that they are either interested or not interested in participating in some type of a process or learning more about potentially buying the business. And the more people that you have interested that are educated, right, the better chance you have of, basically being successful in a transaction and an exit.
All right, great. We've got time for one more question. And, you guys spoke with me in advance of this conversation on this podcast, but I don't think I teed this one up for you. So this is a newbie, and that has to do with, as you think about your business, Acclaro Growth Partners, growth strategy consulting, any hopes, dreams, aspirations, challenges that you'd care to chat about with our audience? And related to that, as our listeners are intentional growers, I described them, potential acquirers, potential sellers. As they listen, how can they reach you? So two questions there.
Go ahead, Dave.
No, just can you summarize the question first, or the context of the question?
Yeah, I mean, in the landscape of growth strategy consulting, you guys are a boutique or a relatively small niche consulting firm with a great track record and good brand, but conceivably there are opportunities for growth that haven't been realized yet. There may be challenges. You guys may have dreams and aspirations. So my two questions were, pick one, a hope, a dream, aspiration, a goal. And then secondly, how can our listeners get in touch with you? I know the website is acclaropartners.com.
Yeah, well, I would say, my answer to that question is that our goal, and my goal as a partner here at Acclaro, is to be that trusted advisor, that go-to partner for our clients when there's uncertainty involved in any kind of go-forward decision. right? So, that's the aspiration for our company. So you can label what we do however you want to label it. You can call it a commercial due diligence study, or you can call it a sell side study, or a midpoint to check in, or ongoing customer assessment. But those are services that we offer. Who we are and what we want to be is that trusted advisor. It's that go-to partner. And we have that kind of relationship with a number of our clients, but it's a select few of our clients because, we give those clients our time. They give us their time. We're in constant communication with them. And by constant, I don't mean necessarily daily or even weekly, but on an ongoing and regular basis. We're aware of what each other is doing. Communicating through picking up the phone, and dialing us directly, or emailing us, and just checking in and see what's going on. But the trusted advisor part comes in when we can actually perform the work that they need done to help them make any kind of go forward decision and remove the uncertainty that's associated with that decision. And I think that's our true value.
That's great. Chris, anything to add there?
So yeah, the worst compliment I've ever gotten in my life was that Acclaro is the best kept secret in middle market due diligence. So if I had a goal for the next 10 years, that would be that secret would get out. What Dave said is true. We have a number of those types of deep client relationships. I'd like to see that be 10, 100 fold, right? I mean, that's the goal. I'll say now most of our business is repeat business, meaning that it's clients that we've done work with, I don't know how many times. At first, I'd like to see, short-term goal, I'd like to see, a lot more new opportunities to try to generate more of the relationships like the ones we currently have.
All right, fantastic. So let's see if I can do this from memory. Dave at Acclaro.
I was just going to say, yes, just go ahead and send an email to dave@acclaropartners.com, and I'll respond right away, and we can start one of those relationships.
And
my email is so much worse. It's C Longiaru at acclaropartners.com. Just go to the website for the spelling of my
Acclaro Partner. Yeah. Okay.
That's great.
That's good. All right. Well, thank you both. I appreciate your time and your insights and wisdom here. For our audience of growers, acquirers, and potential sellers, every couple of weeks I interview a guest who should have a legitimate seat at the table here, a private equity group, an investment bank, or in this case, a growth strategy consulting firm. Head to strategicgrowthcouncil.com, where you'll find lots of resources for business owners and executives, and to access the show notes, and to review us. So give us a click, give us a high rating, give us a thumbs up as well. Thanks for listening.
This podcast was produced by Heartcast Media.